Ghana's annual consumer price inflation rose to 10% in February from 8% rather in the previous month, taking the print into double digit for the first time since May 2010. Well, according to Ghana's Statistics Office, the reason behind this rise was a cut in fuel subsidies, which pushed pump prices up 15 to 20%. Well, joining me on the line to review Ghana's February inflation data is Sampson Akligoh, the head of research at Data Bank Group. Well, thank you so much for joining us, Sampson.
Yeah, you're welcome.
Well, Sampson, Ghana's central bank held its prime interest rate, at 15% on February 13, and economists had been hopeful that low inflation rates might give the bank room for further rate cuts. Now, with this increase in inflation rate, what is the outlook?
Yeah, certainly the increase in inflation rate has actually changed the outlook, and also with the magnitude of increase, clearly the outlook has worsened, and unless the new inflation basket changes the dynamics, there will be no room for rate cuts at the MPC level. But what really is interesting for us again in the market is that we want to see how the government is going to respond to the fiscal slippage that's occurred in its budget, and again, that will also fuel the outlook for inflation. But broadly, Ghana's inflation is not only being impacted by the four price increases, but it's being also affected by broader energy and utility constraints, as well as the single spine wage salary that has been pushed to the public sector.
All right, then. Well, we also see that the country's finance minister, Seth Atekpa, told Parliament during his 2013 budget presentation on March the 5th that the government was targeting a year-end inflation rate of 9%. Now, is this feasible?
So, certainly, it is. If you look at the current outlook, that will be very difficult to achieve unless monetary policy is tightened, significantly. But what we will be able to ascertain the possibility otherwise of this in April when the new inflation basket kicks in. You know that we're going to revise the basket, in fact, starting from March, and by April, we are expecting a new basket which will then set the tone for inflationary expectations going forward.
All right. Now, well, contrary to what your projection is, now, if we do see a rate hike at the next MPC meeting, now, what will this mean for Ghana's growth in 2013?
Hello?
Well, I'm just going to take that question. I said, contrary to your last response. Now, if we do see a hike at the next MPC meeting, what will this portend for Ghana's growth in 2013?
Oh, yeah, sure. When we see a hike, in fact, on the line, if you look at what is happening at the producer price level, we have seen some cost pressures. And clearly, when we continue to see these cost pressures, we could see some effects on the real sector. But again, the main triggers of growth in Ghana in 2013 would not be significantly affected because they'll be led by crude oil, they'll be led by the financial sector, and then the other ancillary sectors that are a bit real estate, and even government services that are a bit immune to higher costs of production. But again, the manufacturing sector, which will feel the brunt of the price increases and energy price constraints, would not be affected would not reflect or have a bigger toll on GDP in 2013.
All right, then. Just in a nutshell, how do you think the fixed income market will react to the data? I mean, has the higher inflation rate, in your view, already been priced in?
No, at a domestic level, the current interest rates are very, very high. And you would recollect that the current, the benchmark yields that we have above 20, especially except for the 3-year notes, above 20% was in response to the currency issue that we had last year. So what the market is expecting really, and from our point at Data Bank, is that interest rates are likely to remain flat, and the inflation increase will have to persist for at least 3 months before we could see some inflationary expectations of feeding into higher interest rates.
Oh, well, thank you so much, Sampson. I've been speaking with Sampson Akligoh, the head of research at Data Bank Group in Ghana.